Right. Now, Mary, let's start perhaps with what seems to be a fairly basic question. Walk us through the structure of what a gender bond would look like, and where do the supporting cash flows come from, and how are these gender bonds structured?
Thank you so much, Rama, for that really important and fundamental question. So what's important to remember is that a gender bond is a bond like any other to start with. And like any other bond, of course, it is raising long-term capital to meet certain needs of corporates or governments. And for gender bonds, what is different is that the funds that are raised are channeled specifically to gender positive outcomes. So gender resilient projects or initiatives. You mentioned financial inclusion. That's a really important one for various issuers in many markets, and certainly in the markets in Africa where this has been issued, that is Morocco and Tanzania so far. And what's important to note is that social bonds are grown significantly since 2019, many times over, from an total issuance size of about 20 billion USD to 224 billion USD. Out of that, 2 billion USD has been raised through gender bonds over that period, and that continues to grow over time. So gender bonds are structured much the same way as normal bonds. The only difference is that there is a lot more clarity and segregation of where the funds should be channeled. So use of proceeds has to be very clearly delineated in the bond issuance documentation. Again, there's a real focus on reporting on how those funds are used over time. So during the tenure of the bond, the issuer has to disclose to its investors how those funds have been invested. And in
But
addition
are
to that,
these
those funds
but is
should be
disbursement of the funds linked to any sort of to meeting any sort of performance metrics over the lifetime of the bond's maturity?
Yes, so certainly one of the other very important components is that the reporting on how those the bond proceeds have been used has to be very clearly defined even before the funds are raised. So, defining what is the target, project or initiative to be funded. And together with that, especially if it is a sustainability linked gender bond, it would have to then have very clear performance targets that need to be met. But that's not the case for all gender bonds. I mean, some of them will raise funds and lend to entities that are owned by women or led by women as a base, and that in itself qualifies as a gender bond. But I think the other thing to say that is very important is that how these projects or initiatives, services or goods are identified has to be very clearly, stipulated in the bond issuance documentation.
Okay, so let's focus on one specific example, because I know FSD worked with the market regulator in Morocco. I believe that was back in 2020 on setting up the ground rules around how to issue gender bonds and so on and so forth. And then the country's second largest bank, BCB, issued such a bond, raising over $20 million in the process. How has that capital been deployed to date? What results are we seeing in that particular issuance?
Okay, so I think the first thing I'd want to say on that is, as you mentioned, the story around the BCP bond issuance started around, the support that we provided to the regulator to provide a regulatory framework for issuance of gender bonds. So that bond was issued in December of 2021. It was issued by way of a private placement. And according to the bond issuance documentation, that bond, the funds raised are to be lent to women-owned and women-led enterprises. And what happens with a bond of this nature is that within 1 year from the time of issuance, the issuer should be able to disclose to its investors how those funds have been deployed very specifically in terms of when the funds were deployed and what impact are those funds having. And I think if I could just touch on that a little bit, there's a very important story there being told about financial inclusion for women, access to finance for women. I want to add that we've also had an opportunity to recently support NMB Bank in Tanzania, another leading financial institution in Tanzania. It's currently raising capital through a gender bond. And these kind of bonds really address a very important need within Africa, and that is the access to finance challenge of women. As you know, I mean, women, of course, if you look at, I mean, women are there in different sectors. When you look at the real economy, I mean, 60 to 80% of the small scale landowners or rather agricultural, entrepreneurs are women. But funding for them is difficult to get. A third of registered SMEs in Africa are actually owned by women, but of course they are not comparable in size or even in terms of revenue and profitability to their male counterpart SMEs, and therefore access to finance is a challenge. I think the other thing I'd want to say also is that, when you look at all the informal sector businesses, 89% of women in the workforce are actually working there, but access to finance is a challenge. And so we see that in Africa so far, and actually in other frontier markets, the funds being raised through gender bonds are largely being channeled to access to finance for women. So a financial inclusion objective, which also has real sector outcomes. And I think that's a really important story to tell. And there's a lot of scope for gender bonds to be used in this way, even more in the
that leads me to my
region.
next question, because given all the constraints you've listed on access to credit, access to financial services, working capital and so on, there's a whole host of barriers that female entrepreneurs face across the region, and yet they do form a significant portion of the entrepreneurs market, at least across sub-Saharan Africa. Do these sort of bonds require a guarantee facility in order to make them, to essentially spur their adoption in the wider marketplace?
So I think what I'd say to that is definitely guarantee facilities are good for long-term capital raising generally, whether it's a gender bond or any other bond. And I would say certainly for this kind of bond as well, that would definitely be useful as a credit enhancement tool. It would definitely attract more capital, make it easier for corporates to issue these kind of instruments. And I think I would just want to add that that's important work for FSD Africa in terms of supporting development of these kind of guarantee facilities.
At what price, though, do these sort of bonds make economic sense? And I'm using Kenya as an example of a market here, because if the government comes into the market and borrows at 12.5%, and yes, we do need to make it easier for women entrepreneurs to get access to finance, but when you've got a government that's basically giving you risk-free money at 12.5%, at what price do gender bonds make sense?
So I think so far what we're seeing is that gender bonds are being priced, not very far from government borrowing rates, so a slight premium. And so they still are attractive to institutional investors who are, of course, looking for yield. But I think in addition to that, one should not forget that there are impact investors who are really interested in this kind of an investment for their own, impact mandates. And I think the other thing to say is that the cost of actually issuing a gender bond is not as restrictive as maybe one would imagine. And, in terms of the social impact and the like, actually does outweigh the cost. But I would say in summary, really, that you're not looking at too much. It's not very different what the rate at which these bonds have been issued so far compared to government borrowing rates. In fact, they've been issued at a slightly higher rate to attract even more investment.
All right, we'll leave it there for the time being. Mary Njuguna from FSD Kenya.